I was reading the transcript of the Tesla earnings call, and I have been crawling through it over the past couple of days to not just to analyse what it means for the stock, because the stock market has given its verdict on that. Instead, I wanted to get an insight into the business models of the Tesla business group and some of Elon Musk's business interests, as well as looking and understanding how a company that really is investing very heavily in innovation, how it sees the world in the future, and also then being critical about that. But also then looking at the business models that we can expect to maybe not develop solely in one company, but certainly give predictive indicators of where things might be going in the future. So with that in mind, I wanted to share some insights with you. So first of all, Elon Musk tells us that the world is headed for fully electrified transport, not just for cars, but for aircraft and boats as well. Now, obviously, there's a really big issue in terms of electrification, in terms of the range anxiety and whatever about having a range anxiety with a car. If it came to an aircraft or a boat, then of course that would be significantly greater. So he goes on to explain how that will be addressed. But the other big development, of course, in the electrical vehicle market is the fact that there is now a second-hand market developing more and more. And a point was raised in the earnings call, which is competitors have discounted their EVs, which has been a challenge for Tesla, but they see it as a short-term issue. And this will be interesting because it does obviously change the dynamics in terms of how much a car costs, the actual length of time that the car can last and be serviced accordingly as well. But this is, as competitors come into the space, of course, Tesla and other EV companies are going to be competing with themselves in the second-hand market. Now, they also talk about priding themselves in the company with the most American-made cars and are continuing their journey to further localize their supply chain, not just in the US, but in Europe and China as well. And they also talk about the impact of tariffs there. Now, when you're looking at a company like Tesla that is making the investments that it is and making decisions about where to produce and sell and import and export, of course, this does then tie across to other companies that are making similar decisions. So it'll be interesting to see how that evolves, and also the decisions about imports as the global world order evolves in coming months. Now, they also mentioned that the energy storage deployments reached an all-time high in quarter two, leading to record profits in the energy business. And this comes up time and time again, is that they're saying that the energy business is growing faster than anything else. And also, the more that battery storage is developed, well, then the more that really big power plants can maintain a steady state, particularly when reliant on energy like solar or other things that can be more variable. Now, this then led to a lot of people questioning, like, what is Tesla now? Is it a car making company? Is it an energy company? Is it an energy storage company? Is it, as I'll go on to elaborate on, is it a more AI production company? Is it something else? And it does certainly raise that question. But when you look at the energy storage does, and EVs are certainly developing as a really important retail source of battery storage. But this would change an awful lot of economics around electrification and green energy, etc. Then, time and time again, they talk about how Tesla's differentiator is autonomy. And Elon Musk says anyone who doesn't believe that Tesla would solve vehicle autonomy should not hold the stock. They should sell their Tesla stock. If you believe Tesla will solve autonomy, you should buy Tesla stock. Now, again, whatever you think about that, within it, there is one kernel of a key performance indicator here that is really interesting to watch, and that is miles between intervention. The more that a person doesn't need to do something, as in intervene in the car's journey whilst it is driving, well then of course the more likely it is that self-driving cars can become trusted. Obviously then there's obviously the regulatory side of things, and we'll get to that, but this is what it comes down to: user behaviour and user trust. So that is the key KPI to watch. Then they also talked about increasing the range of more than 300 miles in a single charge, and the expansion of their supercharging network is the right strategy to combat range anxiety. Now, the reason I think that this is particularly interesting is, number one, that is the number one issue that I hear when people talk about EVs is, what if I get stuck somewhere between two places where there isn't an EV charger, and what do I do? And like I say, that has far greater reaching consequences when you're in the air or on the sea. But the other thing here is that you need to replace the existing fossil fuel network, or at least amend it or restructure it. And that is going to take a really big amount of investment. And who takes that investment? Is it a company? Is it government? But also, we've never taken away an energy source before. So if you're to take out fossil fuels, if you're going to take out an energy source that has previously been giving energy. Well, then of course, then there's all of those economics as well, land, space, creative destruction, etc. And then the other thing is that if they do expand full self-driving cars, well then will people need their own? Does that point to a lower number of cars in general? And therefore, are they developing a supercharging network that will potentially reduce its own very need for that supercharging network to happen in the way it is? Next, they said the sheer amount of money that is being spent by particularly the Magnificent Seven, as they're called, but by technology firms, particularly in the US, is striking. They expect the year to be over $10 billion in capex, and they've reverted to positive free cash flow of $1.3 billion in Q2, and they ended the quarter with over $30 billion of cash and investments. And this just highlights how the US is powering ahead in terms of productivity in comparison to Europe, because the amount of money spent by simply a handful of companies in comparison to the entire European continent is also telling us where productivity is going to come from in the future. Now, again, the bets can be on and off about where that money is coming from and how it's being invested and what it's generating, etc. But just that sheer size of investment from a number of tech companies it's just striking. It really is. Now, then, just in the last part, so this is where Elon Musk has said that he feels the future of the business is. He said they expect to have several thousand Optimus robots produced and doing useful things by the end of the year. So the Optimus robots are going to be AI powered, and also it's going to then be used with a view to doing tasks. And of course, as we know, AI has been doing this gradually. It happened really quickly from when ChatGPT started to come into action. There's much more conversation about it now, but at the end of the day, AI is still possibly in its infancy. And secondly, we're still, as businesses, discovering how to apply it to make it really worthwhile. So Tesla has its own views on this, and particularly from the perspective of smart manufacturing and other tasks. However, what I think is interesting here is that, first of all, Elon Musk says, my predictions on this have been overly optimistic in the past. Okay, so let's take that. And then he goes on to say, I think the long-term value of Optimus will exceed that of everything else that Tesla combined. Then he says there are 8 billion people on Earth, so it's 8 billion people right there could be customers. Now, I would have to be critical of that because I don't imagine that newborn babies would be customers of Optimus. And then he goes on to talk about the industrial uses, etc. So I would take that number with a big pinch of salt. But the other thing is that can we see a world where everybody will want a personal assistant robot like people today want a smartphone? I think that is the interesting thing to question. And then finally, on business models, he talks about what robotaxi could be, which is where using an app I could summon a taxi to me, which is, as he says, a bit like Uber, where I could do that, but then simultaneously, if I have a Tesla car, and they are putting this is in the contract, that a Tesla car can only be rented out to the Tesla fleet, as distinct to any other company involved in autonomy. So I push a button and then somebody else's Tesla car comes to pick me up. And of course it is self-driving, which is, he said, combining the business model of Airbnb. And I think this is interesting when you take into consideration a company that is going to sell a car to its customers and then invite that customer to make money out of another business model within the organization, in an environment where they have built the product that is being sold and then designing the technology underpinning it. It is really interesting to see how this might take effect. Now, there were so many other questions that came up about Grok and about X and about so many other different things. And of course, while all of these are related to Elon Musk, they may not necessarily be related to Tesla. But the earnings transcript certainly is very interesting to watch. Now, the stock market did give its verdict. Earnings were lower than expected and lower than last year. And a range of other financial metrics were there. And I could record a whole other video discussing that, but I particularly wanted to share the summary of this when we look towards business models, how AI is being deployed, and also as well how we see the future of energy, because that, I think, is worth considering, critiquing, yes, certainly, but considering, and then let's see where we take it from there.